Joining us now on the market, Sylvia Jablonski, Defiance ETFs CEO. Sylvia, good morning. You know, we've just been sort of taking a little assessment of how the market has been so far, year to date being about 3 weeks. And it's interesting because so much talk about, is it going to be a tech-driven market? Is it going to be a broader market? It's kind of all of the above so far. I mean, you have the S&P, the NASDAQ, and the Russell 2000 all up between 3.8 and 4% so far in January. How do you think it makes sense to think about what the market's been doing so far?
Good morning, Mike. Well, I agree. I think it's kind of all of the above. You know, on one hand, you have the broadening trade. So you have the XMAG that's doing well. If you look at the top performers of S&P 500 last year, there were companies like Vistra, XON, there are companies like United Airlines, you know, Broadcom, kind of X the Mag 7. But then tech is winning, but tech specifically in AI infrastructure and quantum computing. So, you know, you've seen a lot of growth in companies like Oracle, particularly around this Stargate announcement recently. You've seen a lot of movement in NVIDIA, which has been there for a long time. And then also some of these like IonQ, Oklo, Vistra for AI infrastructure. So kind of all of it has been working this year, but I'd say it's a little bit more nuanced than just Mag 7, which it was the year before.
Right. And I do know that XMAG is, you have an ETF that's essentially the S&P outside of those 7 stocks or thereabouts. I guess the other question is, what's the backdrop we're operating in right now? Because we've gone through a couple of cycles here, even since the election, of saying, OK, let's buy cyclicals and financial stocks because that's the textbook Trump trade from 2016. And we had an unwind of that in December. And now it's maybe wading back into it. So do you think the economy mostly explains where we are in the market here, and what do you think is going to be the key catalyst going ahead? We do have a Fed meeting next week. We have already some rhetorical pressure on Jay Powell from the president.
Yeah, so I think a couple of things are going to come to fruition this year, and a lot of those are going to be the hot button topics for Trump, right? Like now we got this talk about the crypto policy, and so maybe you see the price of Bitcoin, the different cryptocurrencies, stocks like MicroStrategy move around that when we kind of see what comes out from this committee. Number two, again, the AI quantum, you know, investments in Stargate, government funding in that space, you get some growth there. It's not the typical Trump ticket that we're used to. I do like some bank stocks, though, and particularly SoFi, which I guess is also kind of a tech stock, and they have this kind of land and expand policy. The younger generation is investing and, you know, getting mortgages, loans, and then investing, buying crypto there. Trillions of wealth will filter down there. So that could be something interesting in financials. But I just think, you know, to answer your question, I think broadly the market's in good shape. GDP is between 2 and 3%. Inflation is the same. We hope it stays that way, right? Productivity is good. When you have GDP positive, usually, you know, 90% of the time, equities rally and are also positive in those years. And so deregulation, tax cuts, bring it back to America. Investors are just liking what they're hearing right now, and that's making for broad-based performance.
There's no doubt about that, although I wonder what your read is on some of the more speculative type activity. And it's not necessarily to say that it's bad or it's dangerous, but this idea that like the leveraged ETFs, a lot of volume from retail in options trading. And you mentioned the quantum theme. I know you have an ETF. I mean, some of those stocks were basically penny stocks a few months ago, and now they're some of the most actively traded on, on the board. And so is that something that we have to be aware of in terms of overheating potentially of that type of activity?
Yeah, so we always see this in markets. You know, there's always some part of the market that ends up being quite risky and pans out, and then there are different parts of markets that investors might pour into, like some of the crypto coins you were talking about before that just don't really mean anything and are bubbles, right? So I would say, you know, just in terms of portfolio allocation and investing, you have your broad-based investments that are you know, S&P 500, NASDAQ, some of the stocks you like, these quantum AI themes, and a small slice of your portfolio can be to kind of gamble on some of these riskier types of plays. But I think in terms of, you know, things like quantum and AI, right? Like these are real themes, and you have actual companies that have balance sheets like Google and Microsoft that are involved in quantum computing too, right? So it's not just the small cap stocks. So some of your small caps will be winners. Some of them will be big M&A targets, and others will flop, right? So you want that ballast of all of them in the mix. And I think that's just it, you know, balance and diversify. And sure, take some risks on a couple of stocks that you might like, but just, you know that it could also go the other way on you.